Yeah, if you look at trade tariffs, they're not good for business. They slow down economic growth. They drive up inflation. So the secondary effects of tariffs are not good for our business. However, if you look at the Clariant specific situation, we have 86 sites globally. So typically we produce in a region for a region. So for us, actually, the direct impact of trade tariffs is fairly modest.
I also have a question when it comes to Lucas Meyer Cosmetics. This was an acquisition, something we've spoken about in the past, a real growth area in recent years when it comes to the cosmetics business. But we know that what we've seen from the latest numbers from a whole range of different companies reporting that something is slowing down in that sector of the market. Is that starting to catch up with you too?
Yeah, Karen, if you look at luxury cosmetic markets, what we've seen is that some of the luxury brands have seen some headwinds, particularly as it relates to the lower consumer confidence in China. So overall, luxury brands are seeing some headwinds. If you look specifically at the segment where we are operating with Lucas Meyer Cosmetics, this is the premium segment for anti-age creams. That continues to deliver solid growth, and we actually were very pleased with our performance. High single-digit growth last year. That acquisition is delivering the business case.
Conrad, lovely to see you, sir. You mentioned about your global presence, which acts as a mitigating factor to those tariffs. But if this thing explodes and gets out of hand, and we can't necessarily say that we're not going to see some form of tariff war, of course, which is still on the back burner between Europe and China. How much worse could this get, regardless of, I understand, your global presence?
Yeah, if you look at our global presence, I mentioned the 68 factories that we have globally. So we are actually well represented in all of the markets. We did a specific analysis also for North America, where we see that of the revenue for Care Chemicals, more than 90% is produced locally. For additives and adsorbents, more than 70% of our revenue in the United States is produced locally. For catalysts, it's a bit less, but the segments we're competing in the United States, here we do not have competitors with local production. So like I said, for Clariant, direct impact is very modest. If you take a broader sector perspective, Steve, and particularly if you look at the European situation, roughly 35% of production in chemicals in Europe got exported. So export has been a growth driver historically for the European chemical industry. So if it comes to global tariffs, this is certainly not a good development for the sector.